Welcome to this Energy Quick Chat where we rub minds with stakeholders and players in the energy market. I am Justina Okechukwu. Now, the rising oil prices are having a mixed impact on the global economy. On one hand, they are boosting energy profits and helping to offset some of the impact of inflation. On the other hand, they are raising transportation costs and could dampen economic growth. Well, Rajendran is the head of global oil and downstream markets at energy information company, Energy Intelligence, and he joins me now from New York City. Abi, thanks for joining us here on Energy Frontiers.
Thanks for having me.
Now, so Saudi Arabia's cabinet on Tuesday said it reaffirms its support for precautionary measures by the OPEC Plus to stabilize the market. So with Russia and Riyadh extending their production cuts into September, how is the global oil market currently faring?
First, thanks for having me. It's a great question. I think the market was a little bit overly pessimistic, a couple of months ago. And it was just sort of waiting for demand to pick up, right? The seasonal pickup in demand that usually happens in June, July, August. Also, there was a lot of supply, including from other OPEC sources. First, Russia's supply was not falling yet. And there was also a lot of supply from Iran and other sources. So the market was definitely, kind of pretty well supplied. But of course, the June OPEC cut meeting plus the additional cuts from Saudi Arabia have changed the picture, but so has demand, right? Demand has definitely picked back up. U.S. demand is strong. You've had seasonal pickups in demand, and in other places, Chinese demand has been okay, but that's been offset by your seasonal strength. So the oil market, I think, is in a pretty fair spot right now. I mean, I think when all the different sources align on the supply and demand side and fundamentals tighten, I think that definitely supports an oil price that's, sort of in the mid 80s for Brent. And of course, the other thing that's also helped the last couple of months is just generally the global, economic sentiment has also improved, right? So there's been more, the belief that Western economies, especially the U.S., will be in more of a soft landing than a recession. Europe is in a pretty weak spot, but generally, there's this belief that the global economy will be okay. It's not headed for any kind of a crash, and that's also helped. So I think the market is in a pretty good place right now. Back to your question, I think OPEC Plus wants stability. They don't want prices too low, of course, and they also don't want prices too high because that causes other problems. So I think an oil price that's in the 80 to 90 range is something that definitely checks that box from a stability standpoint. So I think the market is quite well balanced. It's in a decent place, and I don't think prices are too high for consumers right now. So that's kind of where my summary of where I see the market.
Right. So how do you anticipate the decline in China's exports and imports and the general economic performance will impact oil prices in the near to medium term following the recent data?
Yeah, I think the momentum has been positive, right? And I think the sentiment is still good. So I would not be surprised to see oil prices touch 90 or go into the 90s. I mean, they already went, to 87, 88 for Brent, right? So they're already pretty close to that. I wouldn't be surprised to see a little bit of, further upward momentum, especially as we kind of realize that, central bank tightening and, the interest rate cycle is now, pretty close to over, more so in the U.S., maybe a little bit longer in Europe, but certainly in the U.S. But I do think, to your point, I think China has very high levels of inventories and stocks that they built up in the first half of this year. So I think Chinese buying will be one of those things that caps how high prices could go. I think you're going to see this theme of reinflation more broadly be something that the market focuses on and talks about over the next 3 to 6 months. Right now inflation is coming down, which is good, but I think there are drivers that could see inflation kind of creep back higher. Later this year and into early next year. So I think that's something to think about. I also think OPEC Plus doesn't want, prices to go back to, 100 plus and then, cause more economic problems, because I think if we go to 100, 110, I think we'll end up back at 70 or below after that. So again, stability is something that they want. So they also don't want prices to go, too wild to the upside. So I think, I think, if prices go to 90 or into the 90s, I think that's probably where they will sort of pause. But I think, there are, again, these factors that will keep prices that kind of pull them back more to the 80s over the next 3 to 6 months. I think 80s is a good level that works for everybody, for suppliers and producers and for consumers as well.
Right. So while this is affecting, might possibly affect consumers, what policy strategies do you think governments can adopt to mitigate the impact of rising oil prices?
Yeah, I think, with oil prices in the 80s, I don't really expect to see a whole lot. I think consumers can handle it. Emerging markets are generally doing quite well. I think of countries like India, Southeast Asia, even Africa, Middle East, I think they're doing quite well. And I think, $80 to $90 oil. And then conversely, what that means for gasoline prices, for other fuel prices, I think that's something that consumers can generally handle. I don't think they need a whole lot of, sort of government and, subsidy support. So I don't expect to see much here. I think it's really when prices start going towards 100 and above, that's when you start to see more of this, right? It becomes more of a pressure on consumers. Governments are pressured to, feel like they have to do something. I don't think we're going to go there. The one other factor that I, didn't, elaborate on earlier is that, last year when oil was at 100, 110, 120, and even higher, there was a concern that we were going to run out of supply, right? Because everyone thought Russian oil was going to go down. Yeah. There was less, OPEC plus spare capacity. We were worried that, we were basically just going to sort of run out of supply. That's not a problem anymore, right? OPEC plus has, over 5 million barrels a day of spare capacity. There's still oil flowing pretty freely from places like Iran, for example. There is still growth coming from the Americas, both North America and South America. I just think you don't have to worry about supply anymore. So that's also going to, limit how high oil prices can go. So I don't think consumers have to worry. And back to your question, governments have to worry quite as much as, as they did last year when we were in the early months of, the Ukraine conflict and worries grew from there.
Right. So lastly, let's just wrap it up here. How, as the week draws to a close, what's your outlook for oil prices? And secondly, what are some of the key indicators that you market analysts are looking at?
Yeah, I mean, look, we're still in, early to mid-August. We're still not quite done with the summer. Especially in the month of August, a lot of traders are, on vacation, on holiday, so you tend to have, light volumes, you tend to have, less trading. And so I actually generally think that the positive bias that you've seen in markets recently will continue in the next couple of weeks. I do expect oil to touch 90. But I think when everybody kind of comes back from their holiday at the end of August and early September, there's more activity, more pickup. I think that's when people will start to, sharpen their focus more on fundamentals. What's happening with demand is the global economy really okay? I think also once you get to September, October, demand will peak for the year, right, and start to come down. And then you also have to think about, okay, when does Saudi Arabia start to bring supply back? Because there's no shortage of oil. It's just, it's just a deep OPEC cut that's tightening the market. So I think in September, I would say, I think there'll be more focus on fundamentals. Fundamentals will not be as strong in the fourth quarter as the third quarter. So I do think that whatever high the prices get to, they'll come back down to some degree. I think a good number to think about for the fourth quarter is, somewhere in the mid 80s for Brent. So I think the next couple of weeks you could have higher prices, but then I think once things settle down, they'll come back down to some degree, but still be in the 80s. I don't think oil prices are going to be running to 100 over the near term.
Keep watching that for us, and we'll be expecting more updates. Rajendran, Head of Global Oil and Downstream Markets Research at Energy Intelligence. Thank you for sharing your insights and expert analysis with us. Thank you.
Thanks for having me.
And that's it on our Energy Quick Chat. Thank you everyone for taking time to watch. Make sure to comment, like, and subscribe to see more videos like this, and follow Frontier Africa Reports across all our social media handles. Bye for now.